Hello, everyone. Welcome back. My name is Greg Furman, and this is the Vantage Point AI Market Outlook for the week of January the 1st, 2024. Now, to get started this week, where we will begin where we usually do with the US dollar index. Now, the dollar index down about 2.03% in the month. Now, this is something we expected with that seasonal in the dollar, and that weakness is likely to continue into January. But we will still have some of that dollar strength at the beginning of the month where people are required to buy US dollars. They don't have an option. So right now we can see the Vantage Point indicators are turning slightly bullish here. Our neural index strength, our predicted differences are starting to rise, but we have at least a short-term bottom in at 100.61. But in 2024, I do anticipate the 100 level will break, signaling stronger metal prices. A number of different trades in emerging markets could form from a weaker dollar, but for now, expect some minor strength to begin the month. Now, when we look at oil prices, a very, very high correlation to the dollar index, as I talked about in last week's weekly outlook, we can see that using the proper anchor points of the current monthly opening price, we hit that number on multiple occasions in the month of December, failing each time. And as discussed in last week's weekly outlook, most of your energy sector falling with these oil prices, nat gas way down, very, very low levels there. Energy, in my respectful opinion, not really the place to be here at all, actually. And it's simply the Vantage Point software validating that. We can see we're below our quarterly opening, our yearly opening price, and firmly failing at that monthly opening price. Now, what we should expect, however, is that if we do get some life in the dollar in the first 8 to 10 days of January, we should see a little bit of a recovery in oil prices, but I'm not expecting much. Right now, we've got that reverse check mark here showing that a corrective move higher is likely, but again, our T-cross long 73.43 likely to contain that. We've got our MA diff cross is moving to the downside, but not an awful lot of momentum here. Our predicted RSI basically moving sideways. Now, when we look at gold prices over the fourth quarter this year, up 11, almost 12%, very, very good move here on gold. I anticipate gold will have a good year in 2024, but it will still have its ups and downs. Our T-cross long, that's now coming in at 20.42. We're looking for that level to hold, but remember in 2024, we're going to get a brand new yearly opening price, and that will be a pivot area for the metals. When we look at other metals here that usually do well in the month of January, would also be would be platinum. Now, platinum has a strong seasonality in January. But again, it hasn't done as well as what gold has. Very, very close. Gold, the main driver here. But again, we will look for both of these metals to rise, at least in the month of January, once we get past some of this dollar strength. Our key gold level, again, 2042. We want to hold above that level if we're going to stay long on gold contracts. Now, the S&P 500 this month up 4.63%. But we are losing momentum in this particular stock market rally, the Santa Claus rally. So probably a little bit more strength in this coming week, but I would expect a pullback. Our T-cross long here is 47.03. That's the level we're looking for it to hold. But the indicators in Vantage Point are neural index strength, the neural index. The predicted differences are turning down. And if we lose our long predicted at 47.63, we're likely to move to our T-cross long very, very quickly at 47.03. Now, Bitcoin here this month still doing very well, up almost 11% in the month of December, but again, not a lot of momentum. We're closing below the T-cross long, 42,663. The bulk of the indicators here are negative, but we are firmly above the yearly, the quarterly, and the monthly opening price here. So again, likely going to see a bit of a pullback in Bitcoin in choppy January trade, and then Bitcoin will likely start its move back up over the 50,000 mark, probably I'm guessing around the late February, early March time frame. Now, when we look at some of our main Forex pairs going into next week, the euro pulling back to end the week, I would say we have a short-term top in place, very short-term actually, probably 5 to 8 days. That's coming in at 111.40. We'll use our T-cross long as our pivot area, 109.64. But again, the euro is likely to have a relatively decent year in 2024 as the Fed starts ratcheting up the rhetoric on rate cuts. So I'm still not convinced he's going to cut more than 3 times, but we will monitor it here and I will update as needed. But for now, a retest of 109.64, our T-cross long for next week, is very, very likely, or in the next 5 to 8 days. Now, our US Swiss franc again continues to move lower, but much like the dollar index, we finally are not making any new lows here. This low is coming in at 83.33. I can visually put that on the chart for you so you can see it, and that's the area I would watch for short-term long positions, just in that first maybe 8 to 10 days of January in that period of dollar strength. But this would be a retracement back to our T cross long. That's the 85.89 area. But first, we've got to get past the long predicted at 84.82, and that would allow us to get to that 86 level where we would be looking to reset shorts. Now, the reverse check mark on our neural index strength predicted differences, not a lot of downward momentum here. So watch that level or that low coming in at 83.33 very, very closely. British pound, US dollar, again, we're either buying or selling US dollars in the Forex market. I think sometimes we forget that. The dollar is broadly weak, then any one of these pairs will work, selling the US dollar. So we want to be cautious. We will, the week next week is still a holiday short week, in my opinion, because a lot of banks will be out the better part, and they will come in the following week in January. And that's the week where we're going to start to see real pricing. So for now, our indicators are basically somewhat neutral here. I would expect a retest of 126.72. That's our main pivot level, our Vantage Point T-cross long for next week. We stay long as long as we hold above this level, but if we start losing that level, we could have a moderately deeper corrective move lower, but that's all it would likely be, guys. We would still be looking to sell dollars as we start moving into the middle part of January. Now, with the dollar yen, going into the dollar yen for next week, once again, the dollar yen, that carry trade starting to come unwound here. The yen gaining some strength with those, and the yen is a very high correlation to gold contracts. So we would expect more yen strength to some degree. But unless the Bank of Japan gets on board with some sort of rate hike, then that carry trade could start back up again in the midway through the first quarter in 2024. So we'll watch that one very closely. Right now, a retracement to the T-cross long at 143.40 is very, very likely, but the indicators are saying it's a corrective move at this time only. Now, as we look at the US Canadian pair, again, only in my respectful opinion, I think that this will be a very good counter trend long position, particularly in 2024, regardless of US dollar weakness, because I believe the Bank of Canada will start to cut here, will be the next bank to start cutting aggressively. Canada hasn't seen any growth in months. The GDP provides clear evidence of this. So again, I think the Bank of Canada is going to be in trouble, but these Vantage Point indicators are starting to turn over to the long side. We've got a verified support low. That's coming in at 131.78. Slight breakdown below that level would be a buying opportunity, only in my respectful opinion. As oil prices continue to slide, I believe we'll see a corrective move in the equity markets. And we've got the Bank of Canada that is likely going to start aggressively cutting. But again, they haven't said that yet, but I believe the reality of the Canadian economy will force them to do so. So the other thing I would point out here, we have a significant distance between the current price and our T-cross long at 133.61. So if nothing else here, guys, we're likely going to retrace to that level over to the next several weeks. Next week being a critical pivot area. Now, when we look at the Aussie and the Kiwi, likely we're going to see something very similar. The Aussie is likely going to finish the year here. I would argue is going to finish the year right on the current yearly opening price. That level is coming in at 68.17. So this will be a make or break area for the Aussie, but I don't think the buying in the Aussie is really going to start to pick up until about the second week of January. The same thing, in my respectful opinion, is the Kiwi. Now we can see these indicators in Vantage Point, the neural index strength, the predicted differences, they're all turning bearish, but it's a corrective move, not a new trend back to the downside. The Kiwi, I'm seeing the same thing, but again, if you're not using the current yearly opening price and using a rolling performance model, you're using a lagging model, guys. You can't keep moving the goalposts on your price action anchor point. So that anchor point of the yearly opening, we have failed every single day last week at this particular price. So I believe we will see again a corrective move back down to 62.48, where we're likely to see buyers come back in to this pair by about the middle part of January. So a happy new year to all, and this is the Vantage Point AI Market Outlook.